Hello everyone, welcome. This is a webinar referring to the trading, how to trade basically the Asia trading session. I don't think I have ever presented something similar. So after a request from one of our clients, we proceeded with the creation of this special webinar on how to trade the Asia session. So before I start, as usual, I need to make sure that you can hear me loud and clear and you can see my screen. And until I have some feedback from you, I'm going to go through the risk warning as always. So this matter is provided as general market communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So you can find all the full risk disclosure on our website, along with the rest of the legal documentation that you might want to see. So I would like to remind you that this webinar is being recorded, so you're going to receive the recording within the week. For any questions, I think I have a pending question actually that I haven't responded since Monday. I'm gonna do that hopefully by tomorrow. So yeah, any questions? So you're stuck with your strategy, something is wrong, anything you want, let us know. Webinars@agefm.com. Just email me and we're gonna help you as much as we can. That's myself. Been here since 2016, actively in the Forex industry. It's been like more than 10 years now. And for the majority of you that already know me, my purpose here is just help our clients with daily updates, with presentation of strategies, explaining the fundamentals, any education material we try to provide is because we want to help our traders become better traders, basically, because your success is our success as well. So that's my mission here. So guys, I would really appreciate the feedback. Actually, I got feedback from Nicole. Thank you, Nicole. And thank you. Perfect. So we are good to go. So Asia session. So we're gonna go through what we mean by Asia session. So the definition of Asia session, some characteristics that you have in mind, assets to trade in the Asia session, trading strategies for the Asia session, some tips as well, and rules to have in mind. And obviously, any questions that you have, don't hesitate to stick them in the question box, and I will reply on spot. So, just a second. Sorry for that. Just a second. Sorry. Come on. Yes, we are good to go. Perfect. Okay. We covered this one. Sorry, guys. I'm a bit lost in my slides, my own slides. It will be shared only in the form of recording, YouTube link. I'm sorry, Nicole, but due to the regulation, we are no longer allowed to share this material. So yeah, with the recording, I think there are some very, very smart tools that convert the video into slides if you prefer this way. So, but yeah, we're gonna provide the recording in YouTube, so don't worry about it. So okay, let's start. Let's start. So first of all, let's go through what is. Oh, why doesn't comply? Sorry for that. It's a bit sensitive. So what is the Asia session? Okay, what do we mean by saying Asia session? Basically, it's exactly what the name suggests. It is the time period, the trading period, which is defined by the trading hours in Asia region in general, okay? In simple words. Remember, we have London market open, London session, we have New York session, and we have Tokyo and Sydney. Basically, Tokyo, Sydney, and New Zealand as well, Hong Kong as well. So all these are basically all these are under the umbrella of Asia session. So Asia session begins with Tokyo, okay, with the Tokyo Open, with the Tokyo Exchange Open, and it closes. It closes around 6 GMT. Sorry, that's 9 GMT. Sorry, my mistake. 9 GMT. With Sydney closing just 3 hours earlier than Tokyo, but the whole Asia session is we're referring to the whole region. So Tokyo, New Zealand, Australia, Hong Kong. Okay, so all this is under the umbrella of Asia Forex session. However, the most well known is Tokyo. Not only well known, but the one that we have a higher, let's say, volume than Hong Kong, than Sydney, than Australia. Okay, so sometimes the Asia trading session is also known as Tokyo session. Okay, in general, the Asia session is let's say it's a session that it has been a bit overlooked. I mean, in comparison with European and New York session, in general North America sessions. Okay, Asia session typically is a bit overlooked. And I'm going to explain in a bit why is that. It's because of its characteristics. But just to sum up a bit on what it is, okay? It is the session basically from 12 o'clock midnight basically GMT, okay? And ends up at 9 o'clock GMT. You need to be a bit careful with the time zone, with the time change, the how we call it, the sunlight changes. Okay, but yeah, if we just stick to the GMT, it will be midnight to 9 o'clock. Okay, if you're in Asia, that could be translated. I have put some local times as well over here. That would be if you're in Tokyo, let's say, even though I don't see any names that over here that suggest that you are living in Asia. But yeah, in Tokyo, that would be 9 o'clock Japanese Standard Time to 6 o'clock Japanese Standard Time. But I have put the translated GMT times over here, okay, for each session. Sorry for that. So yeah, so this is the from midnight to 9 GMT, and as you might already know from other webinars that we have presented, or with if you're attending our live stream, etc., we have overlaps, right? We have overlaps. What overlap mean is when we have a clash of two sessions of two market sessions. So there is an overlap of Asia session with the European Open, okay? Like there is a clash of the European session with the New York session, or the New York with the Asia. So when New York goes to sleep, there is a common time period, 1 or 2 hours, that it clashes with the Asia session, Tokyo, Hong Kong, Singapore, Sydney, etc. These are the active markets during the Tokyo session. Tokyo, Hong Kong, Singapore, Sydney, etc. So let's move on. As I said, Asia is a bit of an overlooked market, an overlooked session. And the reason for that is because if we compare it with European session, with London session, Frankfurt session, New York session, isn't as liquid and as volatile as those two regions, as London market and New York market. Okay, so that's why it's been a bit ignored for many traders, but that doesn't mean that it is not interesting and it cannot be traded. So some key characteristics of the Asia session is the ones that I'm presenting over here: low liquidity, low volatility. However, because of the low volatility and liquidity, we have seen some ranging markets occurring, and that provides a clearer support and resistance levels and a clearer entry and exit levels as soon as the London market opens. For the Asia session, exactly because it's low in liquidity and volatility, we need a really, really solid, sound risk management plan. Okay, it's a must. So don't think that okay, it's a ranging market, low volatility, low liquidity, I don't need to consider doing any risk management. No, it's a must, exactly for that reason. I'm gonna explain everything in a bit. Also, it is ideal for anyone that is a breakout trader, okay? Because exactly there is we've seen we usually see ranging markets. So any breakout either to the upside or to the downside, it could be considered as an entry. But bear with me. We're going to see everything in detail. So I'm going to explain further these characteristics and how you can use these characteristics, actually why to trade the Asia sessions since it has these characteristics. Because because have in mind, okay, that it's a low in volatility, in volume, lower in liquidity, but with this way you can rely more on the technicals, and also if we have any news releases, we can see that volatility peaks, sorry, and that could be a very significant indication if you're gonna trade also the London session, or you're gonna keep your position open during the London session as well. But yeah, I'm gonna take it step by step. So first of all, the very first characteristic. So since there are a lot of range of market load, it is more convenient places stop and limit than market. No. Market execution as well. I have a strategy as well that let me check again your question there. Is it placing stops and limits? Both. It depends from the strategy. Okay. It depends from the strategy, but pending orders, market orders are more common around strategies based on Asia session. Okay, so you're gonna see later on, dear. Okay, we're gonna see later on. So let's go through the characteristics as I mentioned earlier, one by one. So first of all, why we are saying first of all that it's a session, sorry, that is considered to be low in liquidity. Basically, as I said earlier, we always compare it with New York and London session. Okay, so this is mainly due to the fact that we just have less people in the market that particular time period. I mean, this is pretty much it. Because we have fewer global market participants being active during these hours, midnight to 9 o'clock GMT, that's why there is a low liquidity. Okay. So as soon as we see Tokyo opening, okay, and Hong Kong, we might see liquidity slightly higher, but it will be still lower than the European, significantly lower than the European or North America sessions. Okay, so what that means, what that what the result that makes. Basically, as a result, you will notice, guys, that that pairs don't tend to move much during this session. Okay, so we've seen something like this. We've seen ranging. Okay, this is the Asia session. Cannot see it. Laser. We have seen ranges. So I'm gonna go again over here. It's a chart with the volatility of several major assets. Okay, the whole day, and you can see that here's midnight, right? Midnight to 6 o'clock. Okay, around 6 o'clock is when Sydney closes. You can see that just as soon as until the Sydney closes, we have really low volume. low liquidity, volatility, sorry, it picks up a bit. It picks up a bit as we move into the close of Tokyo, but in comparison with the rest of the day, so basically with the European session starts here until the end of US session. There is a significant difference. So look at that. Midnight, okay, midnight till the next day. So see how, so the two ends, the beginning and the end, which is basically the Asia Open and the Asia session over here until the close, we have the lowest volatility. Okay, this is the overlapping that I was referring to earlier. There is 11:30 clashing between Sydney and Tokyo, then London, and then sorry, this is the New York session, New York Times instead of GMT. I should have translated it, but I have the correct ones over here. The EST as well, so EST in both. So do the conversions, okay? I haven't put it in GMT mistakenly. I provided screenshots on Eastern Standard Time instead of GMT, which is the universal time. I'm really sorry for that, okay? This is Eastern Standard Time. Nonetheless, let's get back over here. So I was saying for lower liquidity, because we have less market participants, and in comparison always with the European and North American sessions. But even with this low liquidity, guys, okay, the non-Asia markets, such as euro dollar, pound dollar, euro pound, are the ones that are less likely to make large moves outside, let's say, the trading ranges that we've seen in during the Asia session. However, this could be a very good indication, okay, to take an entry for the London session or the US session as well. I mean, it's a good, how can I say that? It's a good indication for how can I say that? It's a good indication basically to trade the London and US session. That's why I put this on, because I wanted to show you that even if we have a ranging market during the Asia session, as we move closer to the Frankfurt or even London Open, any breakout, okay, of our ceilings or floor could be an indication on how the asset will trade in the London Open or even in the New York session. Look at that. We had a break above the Asia range, okay, during the Frankfurt. It came up, so that was a bullish indication, but it hit a resistance level. So there are several indications over here. The very first one is that because of that breakup, we might see later on the asset taking an upwards direction. However, now it has a big barrier at that resistance level. So that swing low as we move into the London Open, that was an indication for a near-term reversal. Okay, you can use the ranges of the Asia sessions as your immediate target levels, stop loss levels, and etc. etc. Again, holding a position, holding a support over here, this rebound and this another move higher, which basically formed a higher high, that was an indication that the asset is in an up channel, posting higher highs and higher lows. So that could be a good clue for later on in the New York session. It's just an illustration. I'm going to show you real examples, okay? So I'm just trying to make you understand that sometimes we might have very useful breakouts that could end up be signals for the overall direction of the whole day and night. So the whole London and New York session, basically, okay? So let's move on. Low volatility. Let's again, why it is important, why it is lower, what that means. Basically, always compare with the European and US session. There is a reduced volatility because, okay, there are less market participants. We don't have a lot of news as well. And in general, it's characterized by lower trading volumes because the majority, let's say, of the big players are playing during the London, but more precisely New York session. But nonetheless, this reduced volatility, guys, can be advantageous. Okay, it can be useful. It can be very useful. Why is that? Basically, it would be very useful for traders who prefer, let's say, less hectic trading conditions. Okay, so it's for this type, let's say, of traders. However, in Asia session, we do have economic data releases that they could spike volatility. We have economic data from Japan, from China, from Australia, from New Zealand. And these, if you are a person that can and want to try and trade in the Asia session, you can observe this economic data, you can prepare ahead of them, and because this economic data can still trigger short-term volatility spikes, so some short-term positions. Okay, so regardless if it's characterized by a lower trading volume and lower liquidity, it still could be it can still trade it. The reason for low volatility is the fact that we have fewer active market participants, so that leads. And because of this lower trading activity, we could see smaller price movements and a bit tighter trading ranges. But as I said, it's still sweet. If it is still tradable, and it could be advantageous for traders who want to focus on short-term strategies, or for traders who are basically focus on particular Asia session strategies, or they are interested on particular Asia crosses. Okay. Also, so by saying Asia crosses, I'm referring to Japanese yen. I'm referring to any cross that is Japanese with any cross of Japanese yen. So Aussie yen, Euro yen, Pound yen, Dollar yen, Aussie Kiwi, Kiwi dollar. So any Asia asset. That's why okay, the ones that dominate the asset that dominates the trading during the Asia session is yen. Okay, it's obviously yen because of the economic releases that could affect the Bank of Japan, so GDP, unemployment figures, interest rate decisions, etc. So the ones that they are more volatile are that particular time time period is dollar yen, euro yen, and pound yen. And they can provide predictable range movements that can be still tradable by. So that's why Asia session, guys, it's ideal for range traders. Do we have any range trader over here? And for scalpers as well. For scalpers as well. And that's why it's very, very useful to have technical indicators as well, because we are referring to small price movements. So in order to help us exploit them, we need technical indicators as well. Is any one of you a scalper or a range bound trader? Okay, I did mention that because of the ranging market, we have clearer entry and exit levels, right? Basically, keep monitoring the support and resistance levels and take an entry as soon as we see a break out either of support or resistance level. If we combine it, of course, with a signal from an indicator just to confirm our entry. Also, it's easier, it is essentially basically easier for traders in Asia to spot level of support and resistance because they are clearly and well defined in compared to the London and New York session. I did mention that we need a sound risk management. It might be easier to trade the Asia session than London and New York because it's less volatile, but because of this slow nature of the market, it can potentially allow for more thoughtful analysis of risk and reward. Okay. Also, we said about breakout trades, but just to highlight this point, breakout trades after the close are quite significant. So as the Asia trading session comes to an end, you know that it overlaps with the start of the Frankfurt and London market, right? So more liquidity can normally be seen at that particular overlap, and it's quite instantly. You can see it instantly. So that is something that will help you witness instantly a breakout and take an entry that with a stop loss, with a target level, and go to sleep and come the next morning, check again the outcome. So I spent too much time just on the basics, but I wanted to, I'm gonna run a bit because I want to go through go straight to the strategies. Yes, you're right. You're referring to risk and reward ratio. And yes, it is clear that risk management is needed. Well done. Yes, Nicola, I agree fully with you. Does the Asia session also have an impact towards volatility of indices instead of currencies? I'm afraid not, or at least I haven't seen anything, anything. Sorry. So, Kimon Wetsby asks whether in Asia session we have an impact towards volatility of indices instead of currencies. I am more of a scalper. I like closing in my profits in a very short period of time. So you ask, your question is really, really good. Really, really good question. So as far as I know so far, okay, we don't have a significant a sign or an indication for any volatility in the indices, okay, other than Nikkei, obviously. But mainly is the currency pairs that any strategy that I know about is based on currency pairs for Asia session. It might be just because it didn't didn't saw any so far. I haven't because I'm not usually trading the Asia session, so nothing came across to my knowledge at least. But there are strategies for currency pairs, there are strategies for gold as well. The only thing that I know is in regard to indices, my dear friend, and this is, I know that because of Kathy Lien. If you know Kathy Lien, she's a great trader, economist. She's been like years in the business, so she's well known. I mean, she's a foreign exchange expert. She's an educator. She's publishing books full of forex tradings, her own forex trading strategies, etc., etc. So the only thing that I remember is from her, and it was with the S&P 500. So basically, it seems that uh, by plotting Australian yen and was it Australian yen and S&P 500, there was a strong correlation between the two. Okay, so basically her foundings were based on a correlation between the two. So basically, yeah, so that was, it was all about, it was the correlation of, and also if I remember, yeah, it was the correlation of let me just find out if I can't. Was it? Yeah, but I'm not quite sure if this is actually if it's a strong correlation or not, and whether that is just observed only by Asia session or it's in general strong correlation that we need to have in mind the whole day. I'm not quite sure for that. It's a good question. I'll try to see if I can find something. Yeah. So nonetheless, let's get back and start with the strategies. Before we do that, some pros and cons of trading the Asia session. I'm gonna come back in a bit if I find anything there. Yes, there is an excellent and very good risk and reward ratio during that time, exactly because of the low liquidity and volatility. So that's why it's a pros. It's an advantage, the volatility and liquidity. The lower the volatility, that makes it ideal for traders who prefer stability, small profits, consistency. Okay, so there are both positive and negative aspects for traders during the Asia session. So from the one hand, the low volatility can provide a more stable trading environment. Okay, there is a reduced likelihood of sudden price swings or an unexpected market movement, and that's why some traders prefer to trade the Asia session because they like the more conservative approach, the more they aim for consistency and small profits. On the other hand, though, low volatility, it might limit, okay, the potential for large gains. So if you're a trader that you're looking for, let's say, quick profits, substantial profits, I don't think that Asia session is for you guys. So you need to focus. If you're gonna try and trade the Asia session, you need to focus on those particular centers, financial centers, so Tokyo, Hong Kong, and Singapore and Sydney. So that's why you need to turn your attention to pairs that are related. I already mentioned that, Aussie, Kiwi, and especially Japanese yen, because it's the ones that they monopolize the interest during the Asia session, and the ones that we are seeing some the ones that they can react quickly to any market moving events, and more specifically, as I said, the yen. Even though we have limited trading opportunity because of the less trading volume. The overlapping is something that is not exactly a con, it's not a disadvantage, but you need to be careful. You need to trade it wisely, okay? So it is an advantage, okay? It is an advantage because during the overlap, traders can benefit from increased trading volume and volatility, but you need to be careful, okay? You need to be careful. You need to be careful to set your stop loss, to set your target level, and not too far away stop loss as well. The difficult with the overlapping in general trading the Asia session is that you have to wake up really, really early, guys, okay? Or you have to stay up really late to take advantage of this overlapping. That's why I put it on the cons, because it's outside your hours, this overlapping. For some of you, it might be too late, you might be sleeping, etc. For some of us, it might be way too early. So for me, okay, it's quite early. It's quite early, but I can stick on it. It's okay. It's relatively okay, but I cannot trade the Asia Open that because it's midnight for me. Also, you need to always have in mind the time zone, difference. Okay, depending on your location, you need to have in mind your the time zone. You need to adjust your sleeping schedule. You need to dedicate specific hours to trade, and so on and so forth. So there are some pros and cons, but the best, let's say, option for each individual trader, regardless if, even though we have limited trading opportunities, guys, okay, we have to readjust our sleep schedule. We need to consider time zone difference. There are some very, very there are some advantages, right? Consistent trading, more like as I said earlier, stability. However, it's up to you. I mean, the best option for you will basically depend on your trading style, on your preferences, your availability to actively participate in this session. Okay, so that lies down to your routine, your style, and etc. So, sorry, I'm running a bit because I want to go to the strategies. I waste a lot of time on the intro. So, strong factors that influence the Asia session, and more precisely the currency pairs in the Asia session, are the economic news, okay, geopolitics, like any trade tension between US and China. This is something that can affect Aussie, Kiwi, and the safe haven dollar yen. Trade disruptions, new agreements. These are things that will affect the Asia currency pairs. Also, strongly correlated with commodities. Australian and New Zealand, more precisely, because they are economies that are commodity dependent. Any fluctuation in price of gold, of iron, of copper could affect Aussie and Kiwi. Okay, any shift in the supply and demand, natural disaster, trade disputes, anything that could affect their economies will affect also their currency, and also China, because China is a very it has a very strong trade relationships with Australia and New Zealand because they are nearby. So that affects also China. and 1. So interest rate differentials. There is a lot of carry trade going on because if we consider the Bank of Japan, for example, in which we have always a huge interest rate differentials between Bank of Japan and Bank of England, ECB, and US. There is a lot of carry trade going on. There is a lot of flows of the currencies. Okay, so that's why the interest rate differential between two countries, an Asia country and a European, in Europe or US, or even Australia, which is nearby, it plays a massive role for the cross pairs. So Aussie yen, pound yen, euro yen, dollar yen. Okay, so countries with higher interest rates tend to attract capital flows as traders engage in carry trades, basically borrowing money from low interest countries and invest them in higher yielding countries such as Aussie, pound, dollar. Okay, so these changes in the rate policies influence the currency pairs. We have seen carry trade the last 2 years, guys, 3 years, especially in dollar yen, especially pound yen, euro yen, Aussie yen, Kiwi yen. Because traditionally Bank of Japan is the one that maintains ultra low interest rate policies, is the one that we can say that is the definition of carry trade. Also, global risk sentiment. Yen is a safe haven currency. So if we have a lot of uncertainty in the market, fear, economic stress in the global market, people tend to shift their money into safe havens like gold, like yen, like Swiss. Okay, so yen appreciates during a time of global uncertainty and economic stress. Okay, and if there is a global risk aversion, such as geopolitical crisis or economic downturns, then traders tend to move capital into yen, and basically trade pairs like dollar yen, euro yen, etc. So that leads to yen strength. Also, Kiwi and New Zealand are considered to be risk-on currencies. What that means? It means that they are tied, correlated with the global growth. So the higher the global growth, okay, sorry. So when risk sentiment is positive, so we have risk on, traders tend to buy Aussie and Kiwi. If we have risk off, so risk aversion, there is a capital flows out of this session, of these assets, Aussie and Kiwi, and that's why they drop. And last but not least, market sentiment and speculation. Asia session, during the Asia session, we can see speculative trading, okay, especially in these currencies that I said, the yen crosses. So because it's a lower liquidity market, we can see traders reacting significantly to the news. That's why identifying the support and resistance level in the ranging market is crucial, because even one breakout, even a retest of it could indicate what could happen later on. So crucial to identify support and resistance level is a must. And any breakout that coincides with a signal from your indicator is an entry point. So you can rely on chart patterns of Fibonacci retracements on pivot points. So these are the pairs when they are mostly active, when the liquidity is high and when it's medium. So you can see that the ones that they are high liquidity is dollar yen and Aussie dollar, okay? The other they have medium liquidity. From which factors each one of them will be affected, and any correlation with indices, my dear friend Moswella. So dollar yen, basically with Nikkei positive, they move at the same direction. Aussie, golden iron, Aussie yen, ASX 200. Kiwi with agriculture sector, okay, not so interesting. Dollar, euro yen is the one that in my help you identify correlation, a strong correlation with the global stock markets, but that's not always the case. It's not a strong correlation anymore. So put them side by side to monitor how strong the correlation is intraday. Now, let's start with the strategies, okay? Sorry, too late, I know, but they are very straightforward ones. So let's start. Let's start with the very first one. Sorry, just bring some water. Sorry for that. Sorry. Okay, so let's start, guys. Very first, as I said, Asia session is ideal for range traders, range bound traders, scalpers, breakout traders, okay, and swing traders as well, but mainly range traders and breakout traders mainly. So okay, so the very first strategy is basically a range in trading strategy. So sorry. So the very first steps, right, is to firstly spot the range. Okay, spot identify in your chart a repeated floor, a repeated resistance level. Put some lines on, so to identify this range, because this range, the top of this range, the bottom of this range, basically it's your immediate support and resistance level. Clear it's that, okay? So put your lines on in order to draw the trading range in which the your asset, your currency pair is trading. Okay, so that's the very first step. You can consider entering a buying position either near the top of the channel, the top of the range, basically buy position, a sell position near resistance. So you're gonna, for a short term, you're gonna sell near the resistance because of pullbacks, of a pullback, or you can buy position near support level. For third step is to set stop loss orders. Okay, that should be slightly outside your position, slightly outside your your range. If you're gonna take a long position, just slightly below the bottom. If you're gonna take a sell position, just slightly above the top. Risk management techniques, apply them, and analysis techniques, Bollinger's, Fibonacci's, parabolic SAR, MACD, anything you want. And this is not a proper strategy. I'm gonna come in a particular one with steps in a bit. Just a second, okay? I'm just explaining a bit just the range trading. Have in mind the key characteristics of of Asia session is the fact that we, on average, we see on average a daily range of 40 to 50 pips, okay, during the Asia session. 40 to 50 is the average range that we can see during the Asia session. Okay, exactly because of the low market behavior, the low liquidity, the absence of major economic news releases. Okay, so this is the average range. Okay, so that's why you need to consider entries with you need to consider small. You need to consider that this is an Asia with small movements, so that it means that you're gonna have small profits. So why I said that? Exactly because it's a low volatility and a low liquidity session, and the average range is only 40 to 50, you need to pay attention to currency correlations and to choose on the currencies that they have higher volatility during Asia sessions. So more precisely, if you're gonna trade ranges, so what I mean by trade ranges, buying on the bottom of the range and selling at the top of the range. Simple as that, okay? Simple as that. Then you need to consider pairs like dollar yen, Aussie yen, and euro yen, which they are the ones that tend to respond well to range trading strategy. Okay, small profits, buying the dip, selling the peak within the range. So you're gonna selling the top, your target will be the bottom of the range. If you're gonna buy the bottom, your target will be the top of the range. Now, another interesting, okay, that's a very general one. It's a range trading strategy, but I have a more a breakdown strategy, which is called 20 pips Asia trading strategy, and basically it's a breakout trading strategy. Okay, so this strategy has some rules. Okay, basically this is a system designed to trade the breakouts during the Asia trading range, within basically the Asia trading range during the London Forex trading session as well. So that's why these breakouts usually happen in the overlap session with London Open. But regardless of that, if you have spotted a breakout either before the London Open or during the overlap with the London Open, this is still enough. We just need a breakout. So this strategy is not similar to some other strategies that you might heard regarding I mean, breakout strategy on London Open or breakout on London session or breakdown strategy in New York session is different. It's different. The fact that it's in Asia session is different because the main difference is because the Asia session on average it has a average move 40 to 50 pips. That's why the breakout strategy in Asia session is only targeting 20 pips profit only. Our target is a modest of 20 pips profit per trade. Okay, so there are some rules that you need to follow. Obviously, you need to do your homework once again. Identify support and resistance levels. Basically identify the highest high during the Asia session and the lowest low during the Asia session. So it's this one in this case. Okay, let me draw it. It's this one in this case. Okay. Here it was the overlap with the London Open, but nonetheless, oops, sorry. So the very first thing that you have to do is draw the session high and the session low. So identify the highest low and the lowest low of the Asia session, at least 1 hour before the London market open. Okay, look for days with a tight trading range during the Asia session. Place and buy stop and sell stop orders 2 to 3 pips on both sides. So pending orders, guys, in order to jump and your position to open automatically as soon as we have the breakout. So place a buy stop, or a sell stop 2 to 3 pips on both sides, okay? Either here or here. On both sides. So over here, as I said, the initial low was here, but you need to do again, and you need to monitor your highest low and lowest low, because you're gonna do these steps 1 hour. Again, we're gonna monitor, you're gonna check them again, we're gonna review them again 1 hour before the London Open. So 1 hour before the London Open, if your session low moved lower, then move it lower, okay? Because this is when we monitor, when we checked again 1 hour before. So we have to shift our session low lower, okay? Here, basically, it was 1 hour before the market open. Let me clear this mess. Okay, so this was an hour before the London Open. Setting your stop loss, the stop orders, sorry. Then your stop loss for a buy stop order will be set the stop loss for the buying stop order below the sell stop order. So if we have, let's say, let's focus on the sell scenario, which is what happened over here. If we have, if we're gonna put a sell order, okay. Sorry. Okay. Okay. If we're gonna put a sell order, which is the example over here. Over here, we said that we put sell stop orders and buy stop orders. Let's focus on the sell stop orders. So the sell stop order will have been placed 2 to 3 pips below the low, right? So somewhere here, let's say. The sell stop order is here. Now, the stop loss, okay, will be for the sell stop order will be above the highest high of the consolidation. So that means here, higher, the highest high of the ranging market. Okay. Your profit will be 20 pips from the pending order. Wait from the breakout to occur, and once one of the pending order is activated, immediately close the other order that has been activated. Is this clear? Is this clear, guys? No, actually, it's not for the 1 hour, dear friend. Ideally, you need to have monitor a 30-minute session, 15-minute session in order to spot the breakout and to see your position opening. Okay, so yeah. So here, for example, let's find an example. Aussie yen. Let's use yen. Dollar yen. Dollar yen. Have Aussie over here. Pound Aussie. I had my yen somewhere. No. Just want a second. So for example, Asia. So this is a 15-minute chart, okay? The Asia opened here, yes, and it closed here, okay? So let me get rid of this mess. So we had sessions low here, and initially sessions high was here, okay? We focus on the session, not the US session, the Asia session, this one. So, okay, so buy stop loss above 2-3 pips above it, sell stop 2-3 pips below this one, okay, this low, okay, we are waiting. As soon as our buy stop was, okay, putting also our stop loss orders as well, okay, so as you can see, it was activated here. So let's measure this 20 pips from here. It will be here, and it will be, so in 45 minutes it will have closed on profit, just like that, without us manually do anything, because we have already placed our stop loss as a buying stop and stop loss for the buying stop. How many hours before that breakout? 2 hours, 3 hours before, okay? That was basically the it activated ASAP, hit the target, and closing on profit. Okay, so that's one strategy. Okay, over here we had a significant actually move. Usually we have a lot of consolidation and a much smaller moves. So let's jump into, for example, into the Aussie dollar, for example. Okay, let's, for example, so where is the Asia session? Let me find it. So here it was midnight. That's one. Oh, sorry, my bad. We have Aussie over here. Okay, guys, midnight, 2, 1 hour before the London Open. Here, let me zoom in. I'm gonna go down to the 30-minute chart. That was the Asia. Okay, it was 1 hour before the London Open. So what we had over here, we have this top. Let me delete a few things just for you to see. That was the highest high, and that was the lowest low of the session. Here, not here, this one, this box. Midnight up to 1 hour before the London Open. But look at that.
We put our buying stop, we put our sell stop, we put our stop loss, right? But the position didn't activate it until we just measure it. Yeah, didn't activate it until around 3 o'clock, 3:30, until the US session. So it was activated. How many hours? 1, 2, 3, 4, 5, 6, 7 hours after. But regardless, it kept us into the position. It kept us in, and 20 pips targets were heated. Wait, let me measure it properly. 20 pips. 20 pips is somewhere here. So the target was heated actually midnight. No, not even midnight. The next day, the next Asia session. But that's okay. Still a profit. Just fine. We had our stop loss. We had our buying order triggered. So all good. All good. And okay, so let's move on, shall we? Let's move on. Yeah, so something just to add on it. Okay, that particular 20 pips Asia trading strategy doesn't have a specific currency pair. Just try to focus on the Asia related pairs. The next one that I'm gonna present, okay, basically you could it is correlated with the previous one. It's again a breakout trading strategy. So you might try to use either the 20 pips, Asia trading strategy, or in general any breakout strategy that you want. If you have a particular in particular or one that you're using already, feel free. But have in mind that breakout trading strategies, regardless which strategy it is, as long as it's a breakout strategy, okay, you might consider to use Aussie yen and dollar yen, because they are more responsive to breakout strategies, especially if they are breakout strategies that are set also with pending buying and sell orders, like the one that we have done earlier. So Aussie yen and dollar yen, they are more responsive to breakout trading strategies. Okay. And we have another example here. Okay, this is Aussie yen. This is Aussie yen, and here we had a clear range. So buy stop here, sell stop here. So that was okay. This is just to highlight that this is. Whew, sorry for that. This is UTC +4. So -4. Sorry, -4. Okay, that's why I've seen different hours over here. But as soon as we had the breakout, we have seen basically the sell order activated here, to be more precise. Okay, here, and you see that it moved for 3 straight hours lower. 2 hours, sorry, lower, hitting the target, rebounded back, resistance, and then again a sell-off into the US close. But that's a different story. I want to show you the breakout in the using the pending buying and sell orders for Aussie yen and dollar yen. Let's move on. And here I have drawn also Asia sessions for pound O's, okay, just to show you the significance of the breakout. Asia session, as we moved into London Open, breakout, and look at this, for how long the rally lasted. Here, another Asia session, okay, that was the low, that was the high, eventually broke it and rallying. Another session. So you see, the breakout higher away from the Asia range lasted the whole day, the whole day, the whole day. Have you seen that? While the breakout of the Asia session, but lower with a sell stop order, drifted, right? Breakdown lower, sell signal, breakout higher, buy signal, breakouts by higher, sell, buy signal, a bit limited here, down, sell signal. That was a massive, we had a massive economic release in this Asia session, okay? That's why we had a big range that particular day. But as soon as London opened, we had a drift lower, consolidated a bit, and extended down for 3 days in a row, okay? So there are moves that could last, that could trigger a signal for the next 2 or even 3 days, right? Now, how to trade gold in the Asia session? How to trade gold in the Asia session? 5 minutes chart. Again, same technique. Put your ranges, okay? Basically look for an entry 2 hours, maximum 3 hours into the Asia's open, okay? So 2 hours, at 2 hours you should, okay, 2 hours into the Asia session, you should look for your support and resistance level. So Asia session open here, 2 hours. So this is a 5 minutes chart, okay, 5 minutes chart for gold. 2.5 hours into the open, we were here with the second line, the second red line, that was 2.5 hours into the Asia session, putting our range, putting our support and resistance level. As soon as we see a flip, a breakout, you can enter for 10 plus pips move, okay? So you see, 2 to 3 hours, looking at, basically your entry should be 2, maximum 3 hours into the Asia session, as 2 hours, basically in 2 hours into the Asia session, you should check for support and resistance level and waiting for a breakout. As soon as you see the breakout in gold, take an entry and enter more than 10 pips position. In this case, that was on the today. It was just today, this morning on gold. Large breakout, high Kenashi candles that lasted for actual was more than basically it broke the 2600s and it breached here 2611. So it had 11 pips move. Just the tick, okay? So over here as well, you can draw after you took the trade. You can keep monitoring the asset in this 5 minutes chart. If you have a higher highs, you can put your trend lines to benefit on sell position like this one, or over here all into the London Open. We had this ranging market in which it retested downside, it retested upside, and now is traded with it's traded above the 2608 level. Nonetheless, this is the how to trade gold in the Asia session. 5 minutes chart, entry 2 to 3 hours the maximum into Asia session. Put your support and resistance level on. As soon as you have a breakout, enter for a 10 pips move, 10 plus pips move. Another example of gold, again, Asia session. That was back on the 8th of November, 11th of November. It was 2 hours into nearly 3 hours, basically 2:55 was here in my red line, okay? So Asia session high was this one. Asia session low was basically, no, that wasn't the one. That was 10 minutes before the Asia open. So that was the low level of the session, right? So breakout was at 2:55. We've seen a break lower, okay, and that was a sell position that lasted for nearly 25 pips, 25 points, $25 a move, okay, not a position. That's another example, okay. And guys, I'm sorry, I'm holding you for too long, but that's the most important one. Another one, basically, another two, a buying one and a sell position, and buying trade and buy strategy and a sell strategy. But this is in correlation with the news. That's something that I find out from Kathy Lien, because I was watching her for years. And these are three secrets to trade the Asia session from Kathy Lien. According to Kathy Lien, you shouldn't trade the news in the Asia session. You should trade. You should fade them instead. So don't follow data movements. Fade them instead. Basically, because during the Asia we have market participation, the market participation is lower and moves often pick post data release. Okay, so she recommends to try and trade and wait for the movements to fade before we take a trade. Basically, here we have one example with Australian employment. Okay, this is Aussie dollar 5 minutes, okay, Aussie dollar 5 minutes chart. And here we had the Australian jobs release, and you can see that they spike up, right, hitting resistance, and then quickly revert lower, okay, and quickly reverted lower and bottom over here, right? So after the strong Australian employment report, the Aussie spiked, but only saw a minor continuation until the London, so you see spike and then turn down until it saw a minor continuation until the London open. So support here, resistance here, right? So on London open, we have seen another rebound away from the support level. That's a 5 minutes chart, okay? I'm highlighting this. Rebounded away from a second time from the support level, breaks the resistance, indicating a continuation pattern. So that's why I said wait for the data to fade. That was the first reaction as soon as the data were out, but that started faded as soon as the asset breached support level, consolidated a bit, tried to recover, didn't manage, came back down, rebounded, And as soon as London opened, boom, spiked, broken resistance. That was a nice entry point. So fading the data releases during the Asia session is good in order to spot continuation patterns. Okay. So yeah, another example. That's euro dollar in 1 hour chart. So, oh, I missed the time slots over here. Never mind. Okay. So basically that was approximately this is around, okay, the 3 o'clock US. So the Asia session should be somewhere here, okay? Somewhere here. I don't quite remember. So the ceiling is here, right? Ceiling is here. The consolidations, you can see, continue into the London session as well. But as soon as we had entered the US session and we had the US CPI out, okay, we saw a break higher, right? So we had a move higher, which with the asset moving more than 40, 50 pips higher. Now, in the US close, into the Asia open, we had further consolidation. But before the London open, and as we were still in the Asia open, we have seen that the euro dollar continued to rally. So another breakout and another 40 pips move on the breakout of the Asia session. So Asia session, 1, 2 moves higher. Okay, the euro dollar rally and continue moving higher. And if we had the dollar yen in this, actually I do have the dollar yen. Dollar yen is sell off and further decline in the Asia session. Okay, so look at that. Same data, same day. Oh no, sorry, I don't have the dollar yen, unfortunately. Okay, I don't have the dollar yen, but it was on after the US inflation. We have seen twice selling off the dollar yen because of the US inflation. So there was an exactly negative correlation. So sell off and then further decline in Asia. While for Euro Kiwi, yeah, I have Euro Kiwi again on the US inflation over here, just to show you the correlation, the negative correlation with euro dollar and the positive correlation with dollar yen. So US inflation came out, so break lower, so decline in a sell-off, okay? It paused the sell-off in Asia, but as before the London Open and as Asia session, it was nearly to its end, we have another selling signal with another 50 pips move. Okay, so you should, if you're trading the news during Asia session or during US session, regardless, if you want to trade the news, try to spot the faded data reactions. Okay, because this is when we have the continuation moves. Okay, especially Aussie and Kiwi. Aussie and Kiwi against euro, against Canadian dollar, against Swiss franc, they are pairs that they have extreme moves after the data. Okay, so it's nice to put your support and resistance level in order to spot the extension of the exaggerated move during the Asia session because of data that we have seen during the US session. Why not? Okay, so yeah, they wake up some profits, some continuation moves. It's all about continuation moves. Continuation move, boom, boom. Continuation move, boom, boom. So consolidated a bit and then shifted another move lower. Or you see, this is still a continuation move. Why? Because okay, before that, I should have put the full chart. The Aussie dollar, it was to the upside, consolidated in the Asia session, and we saw this reaction in the Australian jobs and then a reversal down to a new low, but it continued to consolidate it, okay, until London Open, in which it found some ground, broken this immediate resistance level, broke the overall resistance level that we spotted before, actually as soon as the Aussie jobs were out, broke both of them, and we had, boom, a bullish bias. Last but not least, another strategy. Basically, for this one, we have a particular setup in mind. We need 5 moving average, okay, sorry, 16 moving average, exponential one, 16 period moving average, exponential one in 1 hour chart, parabolic SAR, and MACD, default settings. This is a day trader or scalping trading. This is a strategy for scalping or day trading. It is for Tokyo session only and is only for yen related currency pairs. This example is a euro yen 1 hour chart. So what the strategy says is that for a long position, for entering a buy trade, you need to see basically this is the Asia session, okay? So you put in a box the Asia session, or you put your support and resistance resistance level, the low and high during the Asia session, okay? This is the open. Here we have the Asia session open candle, this red one, okay? This is the red one. This is the Asia session open candle, okay? Cool. Which was a negative one, but the very next one, which was issuing a candle, it was a bullish one. So we had we were waiting for the Asia session open, okay? So we put a notification on that candle on that very first hour, okay? And enter a buy if we see that and we take a buying order if and only if we see that the following candle is bullish, okay, is bullish. If our parabolic SAR indicates a bullish signal, so it should be in green and it should be away, should be in green and should be away from the price action, below the price action and in green. And plus another criteria is our 16 exponential moving average, okay, to be below the price action, pointing higher. So if we have this criteria plus MACD, okay, MACD rising, okay, and in a positive territory, not negative territory, in a positive territory, then we can take a buy position in the next hour. So again, we draw a line, we put a note on the Asia open. Okay, the Asia open is here at number 1. Number one. This is the very first hour of Asia session. We put a line and we wait to close. As soon as we see the second candle, okay, if the second candle, okay, is a bullish one but steady as well, same like if it's a bullish one, sorry, if it's a bullish one, we could enter a long entry, but if and only if, okay, in the second hour, if and only if all the other indicators are in line for a buying position. So parabolics are green and below the price action, moving average below price action pointing higher, MACD in a positive territory pointing higher. So if all these are in line with the buying move, then we take an entry with, with stop loss below, with stop loss just slightly below the support level of the Asia session. Okay. Sorry. And basically that would be a trailing stop loss. Okay. So a trailing stop loss just slightly below the support level that will eventually close. So it will close automatically, basically. So it closed, in this example, it closed over here. It was the exit and the take profit triggered as well. For a sell position now, the same criteria, but vice versa. Okay, this is several examples, several suggested exit strategies in case you want to, but I don't have the time to go through it again. So to go through them as well. That's a sell trade example. Again, euro yen, but just the next day, basically. You see, open candle bearish. Next candle was bullish, okay, but look at that. Look at that. Parabolic SAR was in red, okay, and above the price action, which is a negative signal, a selling signal, a bearish signal. Moving average was also above the price action, which is also a negative signal, a bearish signal, and MACD was pointing, actually entered the negative territory. Okay, more precisely, as soon as the second hour closed, we have seen that it pointed to further dip. So that was an indication for a selling, taking short. If you're unsure, then wait for the next candle before you take a decision for the third candle. But yeah, sell position, trailing stop loss either at your parabolic, basically at your parabolic SAR or slightly above your the highest high of your Asia session, slightly above it, trailing stop loss, and it will automatically close over here. Okay, so guys, sorry for being in a rush, but I have the live streaming in 20 minutes, so I need to go. Any questions, please send it to me via email. Go through them, go through the recording one by one. Gonna leave for a few seconds the things to have in mind, but I think we have already covered all this. Okay, and some tips, okay, regarding the best time to trade. Again, these are things that we covered anyway over the course of the webinar, so don't worry about it. We have covered all things. I need to go. Thank you very much for attending. Have a great day ahead. Any questions, any questions, please send it to me via email, webinars@agefm.com. I need to go live in less than 30 minutes for now for the US inflation. Thank you very much. Have a great day ahead. Take care. and see you again next week. Thank you very, very much. Thank you. Bye-bye.